Hello everyone and welcome to this important video. We are looking into the Tesla trading week today. And as you can probably tell over the weekend, if you follow the news at all, there's huge disruption coming from China in the AI space. It's called DeepSeek and it's a new model that seems to dethrone or at least threaten OpenAI and ChatGPT's latest model, which is very interesting because the Chinese achieved that with dramatically lower costs. I think around $10 million in training costs as opposed to hundreds of millions for the ChatGPT and OpenAI crowd and all of the major US AI deep learning models. So what does it all mean and what does it do to the markets? We have to look at DeepSeek because it impacts the entire NASDAQ today. And let's go first into a bigger observation and review of the markets and see what's actually happening here. We have, before everything, we have to take a look at Tesla, of course. And we see here, Tesla is currently at 395. So it was very down. It was at 380, I think, pre-market, very bad. And then rallied up back to 405 and now drops down to 395. So we are down 2.6% after being down last week already. So that is an interesting situation because when we look at the greater market, it's even worse. So this whole thing is actually driven by Nvidia. So you see the NASDAQ is currently down 3.3%. That's crazy. We go into that in a second, but let's look at Nvidia here. Nvidia is down 16%. That is crazy because Nvidia is a $3 trillion company. So we are talking about roughly 500 billion in market cap. So Nvidia lost 500 billion in one day. Why is that? Because people are afraid of DeepSeek. DeepSeek is vastly more efficient and needs vastly less compute than, for example, ChatGPT and OpenAI. And this entire Nvidia boom is driven by people buying insane amounts of chips, of these new super chips. And that is a big problem. At least that's what the market thinks for Nvidia, because DeepSeek now threatens to disrupt this entire thing dramatically, so no one needs that much compute anymore. That is at least Wall Street thinking right now. And as always, Wall Street got it completely wrong and has the wrong intuition about it because they don't have a deep technical understanding and they do not understand the future. So why is this all wrong for Nvidia? I will come to Tesla in a second. Why is it all wrong for Nvidia? Well, because intelligence is inherently not demand constrained. People want maximum amounts of intelligence, which means if intelligence becomes much cheaper, they are just going to buy massively more intelligence. Like imagine, for example, you have a great DeepSeek model that you like, and now all models switch to this much more efficient AI. What are you going to do? Say, oh, now I need less AI. I'm just freezing my demand for great text that I want to write or great financial analysis or something at the level where it is. No, you say if intelligence is 10 times cheaper, I'm going to buy 10 times more because there's no limit to how much intelligence you actually need to be productive. That's true for individuals and it's of course true for businesses too. So in other words, I'm going into that in a different video because this is not about Tesla. This is about the greater AI space. DeepSeek is just another leap forward, regardless if it's stolen or not. Of course, it can't be completely stolen for many reasons, and we should give the Chinese team a lot of credit for it. Partially, of course, it's stolen. Everything is stolen in AI to some extent. It doesn't matter. It's a great innovation, and it will disrupt the market, but not in the way that drops Nvidia. I think, if anything, Nvidia looks incredibly appetizing. I don't have any Nvidia positions. I thought it's a little, high up there, richly valued. I'm very bullish on Nvidia's future. Today, I'm even more bullish. So maybe that's an interesting entry point to start accumulating some Nvidia stocks. Because, my strategy for 2025 that evolves slowly is to slightly diversify, still have Tesla as the absolute core position, but it can't hurt to add a little bit of maybe Nvidia to it, especially at these prices. Let's see. Let's wait a little bit because this can get worse short term. So what does Tesla do? We already looked at Tesla and saw that Tesla is down, but it is very non-correlated today with the NASDAQ, at least on its normal regular beta level. So what you see in the NASDAQ, 3.2% down is dramatic. But when you look at it, here's NASDAQ. But when you look at, for example, the Dow Jones, there's a very rare instance here that the NASDAQ is down 3.2% and the Dow Jones is actually up. That happens very rarely because these markets are highly correlated. So when we analyze the NASDAQ, a vast percentage of this is a very small number of stocks, including, of course, Nvidia is a huge piece of it, that is perceivably very impacted by this DeepSeek news. So here we have clearly a disconnection between the normal correlations of most stocks in the market, because the market downside is driven by a very small handful of energy and AI stocks. So that means that today is an unusual day for Tesla and for the rest of the market. We can't read too much into it. Tesla is very non-correlated with the NASDAQ. Normally, if the NASDAQ is down 3.5%, Tesla should be down 7% or something if no Tesla news are there. But today correlation is a little there's a disconnected situation. We also saw this last week with Tesla, by the way, that Tesla went down quite a lot, or constantly going down, and the NASDAQ didn't. The NASDAQ actually went up. So Tesla has been disconnecting from the market for a little bit. There are some speculations why. It might be the fake news on the Hitler greeting that Elon didn't use, but people said when he sent his love to people and he did this thing, that everyone on the left and on the mainstream media said, oh, now he's a Nazi. And Wall Street is dumb enough to react to this. So I think that controversy around politics was negative for Tesla last week, and that led to this kind of downtrend all over last week. Today, it's just being dragged down by this whole DeepSeek situation, but actually not that much. You see that it dropped here pre-market much more than it is now, or more than it is now. I think we see a bounce here, and that's it. So I will go into the whole DeepSeek situation in a separate video, because I think it tells us a lot of important things that we should understand. For now, let's get to the meat of it. What is happening this week with Tesla earnings, and what is my strategy here? Well, as you know, I'm a big skeptic of playing earnings. I think in earnings, too much attention is being given to the stock before and during. And I think, especially with a stock like Tesla, you can't have an edge in earnings unless you have insider information, which would be illegal. And I think even then it's hard to predict how the market reacts. So I do not play earnings, which means I will not go into earnings with any options position or any leverage. I will keep, of course, my entire Tesla position. I think the odds that Tesla goes to 360 are pretty much exactly the same as that it goes to 440 and anything in between. Honestly, I think if anything, the move might not be that big, because there's too much, everyone has thought too much about it. There is a lot of transparency around things. There are some positive things that Elon could say that would be upside risk, especially if he announces anything about the affordable versions being in production or coming very soon. At the same time, they're probably not going to do that, because you don't want to have the Oswald effect and prevent people from buying the new Model Y. So maybe they don't talk too much about it. There will be questions. Is it still on track? They're going to say, sure, first half of 2025, you're going to launch the affordable model. There's no news here. They're going to be asked probably, what about the pilot for robotaxi? That might give us some information. And as you know, I'm a little bit a skeptic on the robotaxi timelines. So there's downside risk that he says, well, looking like later part of the year, and then they might interpret this as a delay. But these are all total speculations. So I think I don't want to play earnings at all. I think if there's anything to be played in earnings, is that I do not see some major downside surprise. I also do not see any major upside surprise, especially with these markets being a little indecisive. So if you don't see a major upside surprise and no major downside surprise, you could, if you are not too risk averse, you could, put on a short options call and put position to basically create a little funnel, and sell, maybe some, not a lot, by the way. If you do this, you should be very, you can still get creamed But if you want to take away a little bit of alpha with a good risk reward profile, that's what I might do, right? On 1,000 Tesla share core position, we could think about selling some calls because you get very big premiums in these earnings calls for good reason, because there's risk. You could sell some 360 calls, or now it's at 400. So you could sell some 450 calls and some 350 puts, maybe five contracts each. So if you have 1,000 shares core position, you sell effectively 500 shares through 5 call options contracts, short calls at 450 and then the same at 350. And as long as Tesla stays inside this 350 to 450 frame, you just take home the money. I would say that's probably $6 or $7. So you are making probably $6,000 this week if that happens. And I think it's a reasonable risk reward profile. So I might do that. I'm not sure yet. I would definitely wait a little bit longer. Expiration would be Friday. I would probably wait until end of trading day today to see where this ends up, probably at 400. And then maybe I put on this trade. It's a cautious trade because a lot of bad things need to happen. Basically, Tesla would have to fall to 340 or go to 460 in order for you to lose money or for me to lose money on this trade. And everything works out, you are taking home $6,000 this week for every 1,000 shares you have. So that's not bad. So this is my take on it. This is my potential trading strategy, but I would be very cautious with these things. You can easily, you know how Tesla works, right? They say one crazy thing and then it goes to 480 and then you have you're losing $10,000 or something like that. So actually not that much, you lose a little less. So, be always very cautious with options, but this is the one play I might do just to take home a little bit of alpha with limited risk. Normally in earnings, the surprise is actually limited because there's so much anticipation going in and everyone has thought too much about every possible angle. The real surprise is where you see a 10% move in one day and then the next day another 10%. That's where surprises come and people, Tesla releases some insights on Optimus or something. So that's my take on it. I will have another DeepSeek video to assess the entire situation in the AI landscape that is now new tomorrow. And then we go from there. So I hope that was helpful. I hope you have a successful week. And as always, stay focused on the future. See you then.